Kia ora, I'm David Chester with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, the global financial landscape has been changed by a large bank failure in the US. The sudden and unexpected demise of Silicon Valley Bank over the weekend has drawn quick comparisons to the 2008 failure of Washington Mutual. The FDIC has taken over SVB and is looking for a buyer. Final bids are due today. For some perspective, in 2008, the largest American bank was JP Chase, with assets of $2.2 trillion US. Washington Mutual was 14% of that. At the end of 2022, the largest American bank is still JP Chase, with assets of $3.8 trillion. Before it failed, SVB listed assets that were 7.5% of that. Prior to the GFC, US banks had total assets 10.3 times larger than their shareholders' funds. In 2010, that swelled to 12.7 times. By the end of 2022, this was back to 10.7 times, having improved sharply since 2019. In New Zealand, it is 11.9 times now. Will these levels guarantee there will be no immediate US banking crisis? Of course not, but it does seem unlikely unless there's some other trigger. SVB and Silver Lake's woes should easily be contained by both state and federal regulators in the US. This crisis has sidelined the news of the strong February labour market gains in the US. Non-farm payrolls were stronger than expected, with the headline number swelling by 311,000 when 205,000 was expected. Bolstering the swelling is that their participation rate is rising as the healthy jobs market draws in more people to employment. That shift is even faster than the jobs growth, and their jobless rate ticked up to 3.6%, although that's still very low. The unexpectedly strong jobs numbers on their own were read as likely to bring a strong Fed response in their next rate review on Thursday, March 23, New Zealand time. But SVB might change that, and the partisan negotiations for the debt limit expansion might too. They look like a cancer on their political system. Also, the US CPI data is due on Wednesday, New Zealand time, and this should also have a big influence on the Fed's decisions. In Japan, the outgoing Bank of Japan Governor Kuroda defended his monetary easing policies after his final Bank of Japan monetary policy meeting, claiming success that their economy is nearing the bank's elusive goal of sustained 2% inflation. And China's banks extended 1.8 trillion yuan of new loans in February, down from the record 4.9 trillion in the previous month, but above market expectations of 1.5 trillion. This was also the largest amount of new bank loans for a February month since 2004. The US Treasury 10-year yield starts today at 3.7% and down 1 basis point from Saturday, which was a huge 22 basis point dump from Friday. And the price of gold will open today at $1,868 an ounce, and up $4 from Saturday, but up $21 in a week. And oil prices start today 50 US cents softer at just over $76.50 a barrel in the US, while the international Brent price is just under $82.50 a barrel. These levels are a $3 drop in a week. And the Kiwi dollar is softer now at 61.3 US cents. But against the Aussie, we're up a quarter cent to 93.3 Australian cents, in our highest in the year. Against the euro, we're little changed at 57.7 euro cents. That leaves our trade weighted index little changed at 70.1, but a week ago it was 70.8. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.